Very good morning, friends. Today we will be learning about one more candlestick pattern by the name of bullish engulfing. Now, this is a two candlestick pattern wherein the first candlestick is a small red candle and the second is a long green candle. And this is a bullish reversal candlestick pattern. So, let us see what this candlestick pattern is and how to trade in it. Very good morning, friends. Today we will be learning about one more candlestick pattern by the name of bullish engulfing. Now this candlestick pattern comprises of two candlesticks. The first candle is a small red candle and the second candle is a long green candle which engulfs the body of the first red candle. It is a bullish candlestick pattern. That means it forms in a downtrend and reverses the downtrend into an uptrend. Here the first candle is a small bearish candle, that is red candle, and the second candle is a long bullish candle, that means a green candle. Now this is formed at the low of a downtrend as already told. The second green candle should open at or below the close of the first red candle, that is it should have a gap down opening. And the second candle should close at or above the open of the first candle, which means a gap up closing. Now taking the fifth and sixth point into consideration, what it means is that the body of the second candle should engulf the body of the first candle in whole. It should not be the case that the body of the first candle is outside the body of the second candle. The first candle's body should be completely contained within the body of the second candle. The high and the low wicks of the first candle can be outside the body of the second candle. That means the higher and the lower wick of the first candle can fall outside the body of the second candle. First candle in this pattern can be any kind of doji candle, and separate videos will be made available on doji candles also. Second candle in this pattern can be a Marubozu candle, but it should be a bullish Marubozu only. It should not be a bearish Marubozu. Now volume plays an important role in this pattern. The volume of the second candle should be greater than that of the first candle. Then only this candlestick pattern performs better. Once the next candle, that means the confirmation candle, opens with a gap up or the price rises above the highest point of this pattern, it is time to buy. Now the highest point of this pattern means that suppose if the upper wick of the first candle is greater than the upper wick of the second candle, then the highest point will be the upper wick of the first candle and not the upper wick of the second candle. So please bear this in mind that it should always be the highest point of the pattern and not the highest point of the second candle. Now here are some examples of bullish engulfing patterns. The first example shows that the entire first candle is contained within the body of the second candle. The second example shows that the upper wick of the first candle lies outside the body of the second candle. The third example shows that the first candle is a doji. The fourth example shows that the lower wick of the first candle lies outside the body of the second candle. The fifth example shows that the second candle is a Marubozu candle. However, it is a bullish Marubozu. The sixth example shows that both the upper and the lower wick of the first candle lies outside the body of the second candle, which is a Marubozu candle and a bullish Marubozu. Now since the second candle is a long candle, an entry into a long trade is possible only after the full formation of the second candle. The price would have already moved far for conservative traders to place a trade, as the stop loss will be high. You will just see in a moment what I mean to say over here. Hence the conservative traders must wait for the retracement of the price to the low point of the two candles as shown below. Now see, this is the formation of a bullish candlestick pattern wherein the second candle, when it fully gets formed, only then we can enter into this trade. However, if the high point of this second candle is to be considered for entering into the trade, and the stop loss will be the lowest point of this pattern, you can see that the stop loss is way too wide. So what the conservative traders can do is they can wait for the price to retrace to the lowest point of this pattern, and once it comes towards the lowest point of this pattern and then goes back, it moves up, then it is time for the conservative traders to move into this trade with a stop loss of this low, so that the gap between the stop loss and the entry is very less. Now this is the example of a bullish engulfing pattern. You can see that the whole red candle is completely engulfed by this green candle, and the volume of this green candle is higher than that of the first candle. So this is an example of a perfect bullish engulfing pattern. Notice that the bullish engulfing has appeared at the bottom of a downtrend, and once there is a confirmation that the price has started to rise with a rise in volume as well, it is good time to enter into a stock for buying. Now, how to trade with a bullish engulfing? After spotting this pattern, you need to wait for the price to rise above the highest point of this pattern, which in our case is the highest point of the second candle. Now once the price crosses the high, it is time to buy. So as soon as the price crosses this level, we can enter the trade at 436. Now the stop loss will be the low of the pattern, which is the low of the second candle. Now do not exit till there is an exit signal. In our case, it is a gravestone doji which is getting formed, and you can exit at or after the confirmation candle. Now this is the confirmation candle. You can exit at this candle or at the next candle. Now if you enter a trade at 436 and exit at 570, a profit of 134 per share is earned, which is around 30%. So that was all about bullish engulfing pattern. Thank you very much.